Okay, hello everybody. Welcome to today's webinar, where we talk once more about the unified performance management. A lot of companies are talking about enterprise performance management, corporate performance management, integrated planning. When QPI's Apliqo talks about this, our understanding of it is the integration of strategic, financial, and operational plans in an organization. And obviously, the driver-based planning methodology isn't quite or plays a quite important role in this concept. And today's webinar is all about to learn how driver-based planning solves usual planning challenges in an organization. Before we go into session, I want to quickly give you an overview. We have almost halftime. We kicked off this Apliqo webinar series in July this year, and we have already done 3 webinars about different kind of business challenges and how the UPM solution can overcome these challenges. Today is driver-based planning, and it's not the end. We have a second half of it where we talk about other topics, and you are welcome to sign up for these webinars on our webpage, where we share our experience about the different challenges and how companies can overcome them. For today's webinar, I want to give you a quick overview about the flow. First of all, we give you background information about the Apliqo UPM Suite and about the concept. Then we want to give you a quick overview about driver-based planning and why this matters for a lot of FP&A people in the market. And then we want to give you a definition and some examples about driver-based planning concepts and how other companies are doing this. And then last but not least, it's a very important part of today's webinar, is a live demo of a driver model in an organization along the whole stack of an organization, being the operational planning layer and also the full financial core model. So let's get started. Apliqo QPI is a consulting company which is focusing on performance management solutions since a long time. When we are doing this, we are doing it almost every time with technology called IBM TM1, or now known as planning analytics. And we are offering to the markets almost a full stack, being development and support with all our senior experts around the globe. We have an own education department where we focus on knowledge transfer to the TM1 community, where people can get specific certificates. We have an own QPI's code department where we develop a lot of TM1 tools for the community to make the applications better and stronger. And last but not least, and this is the focus of the webinar series, is the Apliqo product, which is a pre-built reporting and planning solution for modern FP&A people, which includes a lot of best practices from a business reporting and planning point of view. The whole Apliqo UPM Suite covers the full stack from reporting and planning point of view. There is a strategic performance management layer where companies can define strategic activities and then execute strategic components in an organization. There is a financial performance management layer which has everything or includes everything from a financial core model, being the P&L, the balance sheet, and the cash flow statement. There is an operational layer with operational models like revenue, workforce, marketing, and so on and so forth. And then last but not least, also a financial consolidation tool which helps companies to fully execute the financial consolidation, the closing process, and the audit requirements from the audit firms. Very important in the whole unified performance management concept is the integration of all the different planning and reporting layers. As you can see here in the center is the financial core model, being the P&L, the balance sheet, and the cash flow statement. And in this UPM suite, you have the ability to do a reporting analytical layer in this area. and then also to execute planning based on a lot of business best practices like driver-based planning, zero-based budgeting, and other methodologies which are part of this financial core layer. And then around this, there are a lot of operational models, pre-built models for workforce, for marketing, for sales, and so on and so forth, which empowers companies really to use these operational layers, use the already existing integration into the financial core model so that you can really execute integrated planning approaches in your organization. Driver-based planning, why does it matter? Let me give you a quick background information about this. My Cubewise and Apliqo itself, we are a strong supporter of the whole FP&A community, where we host a lot of events during the years. And what we see there is that in the whole FP&A environment, there are a lot of changing trends. And what we also see is that driver-based planning can support these changing trends in different kind of areas. And if we look into this a bit more in detail, there are different kind of topics which are affecting the whole FP&A process. It's stuff around planning, about models, level of details, who runs the system, who uses the system, the analytical layer, the time horizon, the data, level of data, and the people who are involved into it. And in the past, a very traditional view of the FP&A part was that it was very static. The models were very static. The level of detail was very high. Quite often, the IT was responsible for the system run. The system which was used was quite often Excel environment. The analytical part was quite simple. When it comes to a time horizon, it was mainly focused on the accounting period, and the people who were heavily involved in this were quite often, or can be quite often, classified as a typical consolidator. But there is a change, and there are a lot of new requirements from business people and from managers in the organization. And if we compare this, what we see is that when it comes from modeling or planning point of view, there is much more requirements on a demand level. There is the models are more driver-based. When it comes to the level of detail, a lot of companies want to simplify the planning process. Means they don't want to plan on millions of SKUs, for example, or thousands of customers. They really want to find a way to use consolidated levels or elements in an organization or from business or dimensions to really streamline the process. Systems which are used for this are more and more integrated business platforms, and the people are going away from the heavy Excel usage. And from a time horizon point of view, companies are focusing much more on rolling forecasts instead of simple accounting periods. And in this area, or for these new requirements, driver-based planning can help a lot of companies to really reach these requirements or fulfill these requirements. Because in all these areas, when it comes to driver-based dynamic planning, when it comes to integrated planning platforms, to executing rolling forecast, to manage big data volumes, with driver-based planning or with the methodology implemented in your planning application, companies definitely have the ability to perform an application which brings much more added value to the organization. And if we classify this methodology a bit more in detail, you have, on the one hand, you still have a lot of planning challenges in the market. Challenges around time. It takes too long time to execute the budget process. The quality of data is not good enough. The total cost of ownership is far too high in a lot of organizations, and too many people are involved in the budget process. So too much resources are involved into it, and they cannot focus on operational day-to-day business, and the level of detail is far too high in a lot of organizations. And there are a lot of budget methodologies who can overcome these challenges. And methodologies like driver-based planning, zero-based budgeting, activity-based budget, beyond budgeting, and every budget methodology fulfill added value to the whole planning process. And today we focus on the driver-based planning, and the driver-based planning can be a basic for a lot of planning activities in an organization. When it comes to strategic, top-down, bottom-up, rolling forecast, scenario simulation, all these kind of very important planning layers in an organization can be executed much, much better if a proper driver-based planning model is implemented. So an added value which driver-based planning can generate to an organization is really the speed. It simplifies the reforecasting process. It allows you to do different kind of scenario. It allows you to really do forward-looking in your organization, and it really drives collaborative planning based on the fact that you can combine the financial team and also the operational planning team into one central planning application. So if we go a bit more in detail to the driver-based planning and the definition and some examples. First of all, what is a business driver? In a simple summary, a business driver is the basic for financial planning and analysis. And very simple, it could be described as an operational cost with a financial effect. What does it mean? For example, an operational cost can be a number of business trips, and the price per business trip, and the financial effect is then the travel expenses, or the marketing activity and the marketing campaign, and then the marketing expenses. So different kind of operational drivers have then an impact on the financial figures of the organization, which means a business driver is always an input value which has an overall impact on the financial core model of the organization, being the P&L, the balance sheet, and the cash flow statement. And just some simple examples, which we will see later a bit more in detail in the demo. The drivers can be different, in different areas. It can be internal or external factors. Drivers can be different kind of business dimensions, companies, cost centers, profit centers, distribution channels, different kind of measures, HR measures, marketing measures, ratios like cash conversion cycles, DSO, DPO, and days in inventory, different kind of reference values like last year estimate information, last year budget information, 3 months moving average, and so on and so forth. Different kind of forecast methods and phasing methods can be defined as drivers to really streamline the process and allows the organization to run different kind of simulations while doing the planning process. But there is one important key principle, and this was something what we have also covered in the last webinar, where we talked a bit more about the KPI and the importance of KPIs. You really have to select very carefully and define the top priority KPIs or drivers in your organization, because it doesn't make sense to define hundreds of drivers and build a model based on this, because this is not manageable in a lot of organizations. Really focus on the core drivers, and based on this, you can then build a proper planning model. Let me give you some examples of the drivers. There is a classical return on investment tree, where you have the NOPLAT and the operational invested capital, and then the EBITDA figures, and then you have, for example, the gross profit, which is an important driver. You have the net revenue, but when it then comes down to the net revenue, you can define drivers like the sold unit, the gross price, or the discount factors on the different gross price as a specific driver. And the same from a cost of goods sold point of view, you can use the units, FOB price, or different kind of import costs as a driver, and you can model it, and based on this you can then model driver based your gross profit. The same from an OPEX point of view, you have different OPEX line items like employee, social cost, marketing, travel, rent, and for each of the line items you can define specific drivers to really drive and model your forecast or planning results. Employee expenses can be modeled based on FTE or salaries, social cost on social cost percentage rates and salary, marketing based on marketing campaigns, activities, travel based on number of trips or price per trip, and the rent obviously also by square meter and the price per square meter. It means for every line item in your P&L in this example, you can really define specific drivers and build a driver-based model for your purposes. And the same way from a balance sheet point of view, there you have the operating working capital, you have your current assets and other asset positions. And for the operating working capital, you can define ratios like DSO, days in inventory, DPO as a specific driver, or the whole net working capital. And then when it comes from an CapEx point of view, a lot of companies are very CapEx intense, where you can build a specific CapEx driver-based model where you define the number of assets and the price per asset, and then also the asset classes and the depreciation ratios. And this can then really drive your detailed bottom-up CapEx model, which then feeds into the overall return on investment tree. So this is a quick overview and introduction into the whole topic. And as next step, we really would like to show you an overview and a live demo of a fully driver-based model in an organization. With 1 second, I jump into the live demo. Okay, I'm back. As you see here, you have a full overview about a driver-based planning model, which covers on the one hand operational parts of a business, and on the other hand covers also the financial core model, being the P&L, the balance sheet part of an organization. You see on top here, we have different steps where we show you driver elements in an organization. We have the gross profit part, we have the personal expenses part, the other OPEX, the balance sheet modeling, and then last but not least, the unified performance management review, where you always see the impact on the P&L, the balance sheet, and the cash flow statement. If we start with the gross profit part, and we can select here in the initial phase, we can select here a specific country, which can be again a driver, a business dimension can be a driver in a driver-based model. And I have now an overview about the workflow, so that the planning cycle of this Malaysia country in combination with a specific legal entity has not yet started, but I initialize it here and start now with my driver-based planning approach. In my next step, I can then define different kind of seasonalities. You see here different driver seasonalities where I have an even phasing seasonality, I have a moderate north seasonality, I have a north sunny or south sunny seasonality. So I really have defined specific seasonality drivers, seasonality profiles, which I then can use later while doing data entry to specific business dimension combinations. And this drives then my allocation and phasing into the different months. I will now stick to the north sunny seasonality profile, and I will jump then into the next steps where I have the ability to plan now my units. I have now a unit price driver-based model, and I have now the ability now based on the combination of company and country, I can now plan my units for the next planning cycle based on a product group or an individual product. So I have the ability now to select different kind of product groups here. I can enter on a yearly base my units, and then based on the seasonality which I have chosen before, the monthly unit split will be automatically allocated into the different months. Obviously, I have also the ability to plan into single or specific months. For example, if I have a new product launch and I want to plan a product or a sell-in a particular month in March, and in July maybe the second one, and then instead of September, I plan another sell-in in October. I also have the flexibility to choose this different kind of drivers, means on the one hand the seasonality profile, but on the other hand also the real individual data entry, and then using the other drivers to calculate the values in the financial core model. So in the next step, I have now the ability to define my prices as a driver. I have now an overview, a table overview about the sell prices for the different products in the different country. Obviously, these sales prices can be loaded from a data source and can be stored then in the application. But I have the ability also to change here prices in particular months. For example, if I have planned for specific product groups a price increase in June, I can model these kind of price changes or changes to the drivers, and I see then immediately the impact on the bottom line of the business. So I have here the ability to really define different price points for the combination of a country or a product, and this will then drive my impact on the P&L or on the gross profit of the business. In the next step, I have now the ability to activate these different kind of drivers and show them in the P&L statement of the organization. I have now planned here my sales for different kind of sunglasses. I have a breakdown here for the different products. And as you see here, I have a specific forecast or driver method, which was selected for these 5 product groups. And by selecting this specific driver, the revenue figures will be automatically calculated, the gross revenue figures, based on the units I have entered before, based on the gross sales price I have entered before, and also the monthly allocation based on the seasonality driver I have chosen in the second step of this wizard. So I really have the ability to choose these drivers and then see immediately the impact on the bottom line of the business. But I can obviously then also plan other parts of the P&L, for example, sales of accessories. I can do a breakdown here by product, and I can then choose a different kind of a driver where I say, okay, I want to plan now all these revenue figures based on a percentage of a specific reference account. So I select this as a driver. I select the relevant reference account, in this case, my gross sales revenue account, and I can enter then a specific percentage rate so that this additional revenue will then be calculated based on the revenue which was generated or planned above, based on the units multiply gross sales price model, which I have explained before. And in the same way, I can then also plan other kind of revenue streams. And also, and this is quite important for a lot of organizations, I can also plan in exactly the same way, also, for example, discount on invoices, which are affecting my overall net sales of the business. So at any time, I have now the ability to do the breakdown of all the granted rebates, again by product. I can select the forecast driver in percent of reference account, and now I select the different account number, which is, for example, the total gross sales revenue account, the consolidated element, and then I plan here different kind of discount levels for the country, company, and product combination. And by doing the data entry, the data will be automatically updated and will be transferred into the financial core model, being the P&L, the balance sheet, and the cash flow statement of the organization. So I have a really powerful tool to plan driver-based my gross sales figures based on the units and the prices, and then also all the relevant net sales drivers can be factored in so that I end up with a proper net sales figure in my organization. At the next step, I have then the same logic for the purchase prices. Obviously, I can load all the purchase prices from my price list. I have the flexibility here to change the purchase prices in particular months. And due to the fact that we are talking here now in this demo environment about a trading company, these prices are classified now as classical FOB prices. So means prices which the factories will charge us or the supplier will charge us when the product will leave the factory. But obviously, if I want to sell the products quite often, I have also other additional costs which are affecting my gross margin. So I have the ability here now, on the one hand, to see my all my cost of goods sold based on the FOB prices, which I have seen before, which were multiplied with the units that I'm planning to sell to the market. But then on top of it, I have also the ability to plan different drivers, being, for example, ship and freight cost, import duties, or whatever kind of import cost I generate or I have to generate to finally get or buy the product and then sell it to the market or to my customers. And this driver works in the same way like we have seen with the revenue drivers before. I can select a dedicated reference account. I can select the account itself and then enter percentage rates, so that I have then immediately the impact on my bottom line, the impact on my cost of goods sold, and then the net effect on my gross profit in the organization. And last but not least, I have then obviously also a full overview based on the data entry I have done before and the drivers I have defined. I have always a full visibility about the planning figures which were generated from the plan responsible people. I have a classical waterfall chart where I have the visibility for this specific country, what revenue levels were planned, what additional revenues were planned for care products and so on and so forth, what rebates I'm planning to give to the market, and then last but not least also the cost of goods sold, which will then end up into my, in this case, closing balance, which represents the gross profit of the organization. So the full visibility of the impact on the bottom line of the business. Then with the workflow, which we have seen before, I have now the ability to plan or to enter comments for my managers, where I say submitted based on year-end review and so on and so forth, and I can add their full narrative. And when I have done this and when I went through this whole driver-based model, I can then submit the data, I can submit the text, and the manager has the full visibility about the current status of the planning process. And if he is not happy or satisfied with one of the figures based on the driver-based planning concept and model, I always have the ability to stress test the data, change assumptions, and see then again immediately the impact on the bottom line. So this was the first part, the gross profit part. In the second part, we want to show you a bit more in detail how this driver-based planning concept works for the personal expenses. I will not go extremely in detail in the bottom-up workforce planning model, because we have run a webinar already about this 2 months ago around, and you can see all the recorded webinars also on our webpage. But we want to show you how this driver-based planning concept also works for a detailed workforce model. First of all, very important is to define the different kind of assumptions, the different kind of workforce drivers. You see here assumptions like social tax rates, on-cost rates, existing headcount salary increases, bonus in percentage, and so on and so forth. And these are all drivers which you can define and where you can maintain and enter data points, so that the calculation and the impact on the financial core model will be calculated automatically. You can also define the dimensionality on which level of detail you really want to maintain the different kind of assumptions. For example, the social tax rates you want to maintain based on a location, but the bonus, for example, is driven from a combination of company and the role which a dedicated employee belongs to. So you have here the flexibility to really define the different kind of dimensionalities and the different kind of level of detail, how you want to maintain then the assumptions and the drivers of the workforce model, so that it then will be immediately calculated and shows the impact on the P&L statement of the organization. So if we show there two examples with the social tax rates, after I have defined now that this driver needs to be maintained on a location or office level, you have then the flexibility to enter here yearly rates. So when you have 6 or 7% on cost or social tax rates, you see that the data will be immediately spread across the different months. But obviously, you can also activate here the monthly data entry. For example, if you have a specific location, Singapore, where based on some legal changes, the social tax rates will change during the planning year. So you have always the flexibility to enter data here on a monthly level. And then drop then into the future months, so that from this month onwards, the social tax rates will be calculated on the new percentage rate. The same with the salary increase. You have here also the flexibility based on the level of detail you have defined before. The salary increase is done based on company and location level, and I can now maintain here or enter for a specific combination of Central Europe and the Singapore location. I can enter here that in March, every employee who belongs to this combination will get a 20% salary increase. And based on this driver and the calculation logic which sits in the background, the total HR figures and values will be calculated automatically. So define the drivers, define the granularity of the drivers, and then do the data entry to it. The next level is then really the planning of the detailed workforce expenses. As I have explained before, business dimensions can also be different kind of drivers. We see here the company, the cost center, the position type. If I plan existing positions or new positions as a specific driver, I have here different kind of HR specific drivers, like the individual employee or the position of an employee, the location which we have seen before, the employee status being a full-time or a part-time employee, and all these kind of different drivers are responsible in the end for the calculation of the final figures of the workforce expenses. I have then also the option to define the start period or the end period of an employee as a dedicated driver, and obviously also the full-time equivalent percentage rate of each employee can be defined as a driver and will then be taken into consideration when it comes to the calculation. And then last but not least, you see here all different kind of relevant HR measures, like the total salary, the social tax, the on-cost rate, the bonus provision, and so on and so forth. And these are all defined HR measures, HR drivers, which will be calculated automatically on the fly based on the assumptions which were maintained and defined before, the data which were entered, and then the calculation logic which sits in the background. So I really have the ability with such an integrated model and with the drivers that I have defined to really do on the fly simulations and on the fly scenario reviews. If, for example, the workforce expenses are aligned with the revenue growth I'm planning in certain regions or other parts of the business. If we look into this a bit more in detail, for example, for this employee, Joseph, an account payable manager in Singapore, we have defined here as an end period let's change it to April. And then you see here with this pop-up window, you have now the full visibility of the values which will be calculated automatically on the fly based on the drivers which are sitting in the background. I have set now the termination for April, and you see now only the first 3 months or only the workforce expenses from the first 3 months are hitting the P&L. And then based on the selected driver, I see that from April onwards, no employee expenses will will hit the P&L for this particular employee. Obviously, I have also here the ability to plan other kind of yearly salary increases. These are other kind of drivers where I can enter a fixed amount. I can enter my personal allowance dedicated in a specific month. And if I then go back here and deactivate the termination period of this employee and go back into the monthly allocation, I see now that the drivers which I have selected and entered will immediately impact the P&L statement of the organization. I have here, for example, in March, if you remember, this employee belongs to Singapore. I have planned in the assumption cube a 20% salary increase from March onwards. This is factored in here. I see the different yearly salary increase which I have entered in a particular month and not via the assumption cube. This will be factored in for all the future months. And then I have also planned a personal allowance in a particular month, which will only affect 1 month of the planning cycle. So I really have the ability to use the different kind of drivers and can plan the whole workforce expenses in this level of detail. And then obviously there need to be a mapping from all the HR measures and the workforce accounts into the chart of account elements. We have seen before all the different HR measures like bonus, on-cost values, salary values, and so on and so forth. And to really assure the full integration into the financial core model, I obviously need to map all these HR measures into the chart of account elements. And by doing this, I can then assure, what we see in the next step, that all the data which I'm planning driver-based in the detailed operational model, that they will automatically transferred into the financial core model of the organization. So I have now selected for the different chart of account elements from the workforce accounts. I have selected a specific driver-based planning method, being the fin expense workforce planning method. And by doing this, all the expenses will be automatically feedered from the detailed bottom-up model, which I have shown before. And there are some other line items maybe in the personal expenses where you don't want to plan or get the data from the detailed driver-based bottom-up model, but you want to do there a full year entry. So you can select the different planning or driver method full year entry, and then you can execute here data entry so that the data will then be directly entered here based on a dedicated and specific driver-based planning methodology. So you have again an example of a detailed driver-based workforce planning model. For a lot of companies, workforce expenses are generating almost 60 to 80% of the total operational expenses. And for a lot of organizations, it's a quite important planning layer to really assure detailed workforce expense planning, which then feeds automatically into the financial core model. The next step is operational expenses. Other operational expenses where we want to show you some other examples of driver-based planning possibilities. The first example is a driver-based planning marketing model where you can plan again based on different kind of business dimensions. In this case, the company and the cost center marketing. I can define different kind of marketing campaigns, for example, a product launch or the seasonal push for the winter season. And then for each campaign, if I click on one of the campaign, you see that for each campaign, different kind of marketing activities are allocated. So I can really define and plan based on the campaign driver and the activity driver. I really can plan in detail my marketing expenses, and I can then plan by marketing activity the dedicated value and also the start and end date and the duration of the different kind of marketing activities. So if I, for example, change here now the end date from August to July, so that this campaign really runs only 1 month, and I enter here a quite high marketing investment, you see that I immediately have here the full visibility about the marketing spent in a particular month, and I can then check if this marketing investment is then also generating, for example, in the second half of the year, the originally planned revenue stream to the organization, so that I really have the full visibility of the expenses which are planned, and then also the expected revenue streams which the company is looking for. So as I said, the ability from a marketing point of view really to plan based on an activity and campaign combination, really dedicated marketing expenses in specific months, which will then immediately transferred and shown up in the financial core model of the organization. The same logic can be applied for travel expenses. For example, I have defined different kind of drivers. First of all, I have defined for a company and cost center combination, I have defined travel routes. For example, Europe to Europe, Europe to America, and so on and so forth. If I click on one of the travel routes, you see here now other drivers in the travel area where I can, for example, plan the number of days for each travel trip. I can plan the number of trips in a particular month, means how many employees from this cost centers are executing a Europe to Europe trip in January. I can enter here the ticket prices, in this case the air ticket prices. What is the average ticket price of an air ticket in Europe or from Europe to Europe? And then I have other travel measures like accommodation, meals, transport, and so on and so forth, where I can enter on a monthly level dedicated values, dedicated drivers, which then will impact my overall travel expenses in the organization and the travel expense line item which sits in the P&L. So if we do, for example, an extreme example, I have here an overview about all my travel expenses on a monthly base by route and by expense type. And if I plan, for example, in January, an extremely high number of travel trips, I see immediately that my January expenses are getting very, very high. I have the visibility based on the graphical support that the main expenses are coming from Europe to Europe because I have planned there so many trips. So I have the full visibility and I can then course correct from a manager point of view if some of the department managers are planning odd figures in this sense. Or also from an air ticket point of view, if somebody has a good idea to fly in Europe business class, and they enter a very high air ticket price, I see immediately that the expenses are getting higher and higher in a particular month, and I have the visibility now that most of the 55,000 expenses are coming from the air tickets, and I can then start the iteration process with my planning responsible people and can then really kick off the iteration, the scenario simulations, or the course correction of the planning figures. So again, define drivers which I can use to really model the business in this area. The next one is a quick overview about rent and maintenance. Again, I have here the ability to define statistical accounts like square meter. I'm planning now for a particular cost center and company combination. In this sense, the administration cost center, I plan square meter entry per month because I have selected here a specific driver called entry per month. I can do here my data entry really on a monthly level. And then in the same combination of chart of account element and the cost center, I can now define here on this layer, I can define that I want to choose my driver being a statistical account multiplier. And this is obviously in this example, the square meter. So if I enter now my square meter price for this particular element and I increase this price now, I see immediately the impact on my rent expenses for the combination of this particular cost center. So really define specific drivers for specific elements of your, in this case, P&L line items, and apply these drivers to your overall planning layers. And this gives you the ability to have the data directly available, have the transparency from the data, and have also the ability to really run different kind of simulations. And in the same way, like we have seen before, you have obviously there a full review of the operational expenses, a review of all the monthly figures which were planned from the different departments, P&L waterfall chart, which shows now much more line items than we have seen before with the gross profit waterfall chart. So I really have from revenue to EBITDA a full waterfall chart, and I see immediately which line item of the P&L is generating most or has most impact to the bottom line of the business. And a lot of companies are stopping here, because for a lot of companies, driver-based planning, if they implement driver-based planning, is mainly P&L focused. But we are a strong believer of this integrated planning concept and of the financial core model in an organization, being the P&L, the balance sheet, and the cash flow statement. Therefore, for us, it's also important, the same way like you model the P&L part of your business, that you also have the ability to really model the balance sheet part of your business. So what you see here for all the different balance sheet line items for a particular company, you have, in the same way like you have seen before with the P&L line items, you have the ability to choose different kind of drivers. And for dedicated line items, you obviously have different kind of forecast drivers. For accounts receivable, you can calculate the closing balance for the accounts receivable based on the percentage in revenue. You can factor in days sales outstanding input values. You can plan the closing balance based on an entry per month. So different kind of drivers which allows you to model the balance sheet from different perspectives and see based on the modeling always also the direct impact on the cash flow statement of the organization. And the same way like we have the drivers for accounts receivables, we obviously have also drivers for other important line items, for example, from the net working capital. You have dedicated drivers here for the inventory line item, which you can select. There are dedicated drivers also for all the different CapEx line items, something what we have seen before in the PowerPoint slide, where you really have the ability to select, for example, the fixed asset CapEx driver methodology. And when you select this, the whole figures in the balance sheet and in the P&L statement, the depreciation will be automatically feeded in from the detailed bottom-up CapEx model. So really don't stop at the P&L part of the business. Choose a solution where you have the ability to model in the same way the balance sheet part of your business, to have then the immediate impact on the cash flow side of your business, which is a very important indicator to in your planning cycle. So the last step from a balance sheet point of view is to illustrate you how the integration of a more detailed bottom-up driver-based CapEx model can be integrated. You see here now an example again of a legal entity, and this legal entity has decided now for a specific asset class being land, for example, and individual asset numbers to plan really on a monthly level the CapEx investments based on the asset class and the individual asset in which I want to invest. So I have now here the ability to enter on a monthly base my CapEx investments, and in total I have planned an investment of 175,000 in local currency, and I see immediately the impact here in my cash flow waterfall chart. I see immediately the capex investment in the relevant planning period on which I'm currently focusing. So at any time when I change, for example, the investment here in a particular month, due to the integration and the leverage of the drivers which I can select here on a balance sheet line item, I see immediately that my capex investment goes up to 275,000, which is coming from my detailed driver-based bottom-up capex plan, which is part of the application. So really assure the integration of operational models into the financial core model of your business. So this is quite important part. And then last but not least, to recap this demo or summarize this demo model is really give you a full transparency about the outcome, the final outcome based on all the different planning models into the financial core model. You have the full visibility about the P&L on a monthly base. You have full visibility of the balance sheet positions and the closing balances for all the different legal entities, so that at any time when I change, for example, now something in the revenue model or in the personal expense model, I see immediately the impact on the financial core model in this planning layer. And I have then also the ability to see the cash flow impact and to a detailed breakdown of the operating cash flow, investing and financing cash flow, and can really reconcile and analyze the data on a very detailed level. And last but not least, it's also quite important for a lot of companies, Forex sensitivity options and review options. I went now through this whole planning cycle. As you have seen, I have changed a lot of figures, and I have now the ability to really copy the data from a particular working version into a specific frozen version. So I have now the ability, because this working budget version is generated based on different Forex rates, which I can see here and track in the background. And at any time, I have the ability to use a different kind of Forex rates and can here, for example, copy other Forex rates based on a worst case scenario or best case scenario. And I can apply these Forex rates directly in the application. And what happens now, due to the fact that we are working here on a fully integrated model where all the operational and the financial core model is integrated between each other, I can go now out here and I can refresh the screen, and I have immediately the full impact, the Forex impact on all my balance sheet positions. I have the Forex impact on all my P&L positions, so that at any time I have a full transparency and a waterfall chart of my FX impact based on different kind of FX scenarios, FX drivers, which I can maintain in the application. So to summarize this, it's extremely important that companies are going through a KPI and driver-based prioritization process. And based on this process, you can define for almost every important P&L and or balance sheet line item dedicated drivers. And then it's extremely important that all these different kind of planning models, operational models, and or financial core models are integrated between each other, so that you can really leverage and benefit the whole integrated model and then really execute different kind of simulations and scenarios modeling in your planning or forecasting cycle. Okay, this was the live demo of the product. Let me quickly jump back to the PowerPoint slide. I have one more slide where I quickly want to summarize the key takeaways and the benefits of a driver-based planning model. The key takeaways should be that driver-based planning itself solves a lot of common planning challenges which we have seen before. But for a lot of organizations, they need an internal and or an external expertise to really build this driver-based planning concept. Means it's extremely important at the beginning of the process, you really understand the flows in your organization, you understand what is really driving revenue, OPEX, or balance sheet line items in your organization. And based on this, you really have to build the driver-based planning model. And it's also important that companies are reviewing the existing software. A lot of companies have invested quite heavily in the last 10 or 20 years into new ERP systems, into fancy BI tools, and so on and so forth. But a lot of these softwares are not fulfilling requirements when it really comes to complex modeling or to build a really driver-based model. Therefore, the existing software really need to be capable to implement driver models so that you really can calculate this kind of business logics. And it also needs to have the flexibility to change the driver logic, because quite often business changes. Your companies are investing into new business, they acquire companies, they have a completely new business model, and so on and so forth. And modern softwares need to be able to be flexible enough to really change the kind of the driver logic. And if you have this, the main benefits from a driver-based planning model is really you generate a higher quality. You can increase the transparency because you don't see only the financial figure in the chart of account. You really understand the operational cost and the financial impact. Because you have the transparency, you can balance the complexity. You don't have to plan on the lowest level of customer, product, or whatever. You can aggregate the levels and then work with the drivers. You can fasten the planning process. You have seen before the scenario simulation with the Forex and with an integration of the model. You really have the ability to fasten the planning process. You can break the silos due to the fact that operational and financial people are working together on the same application. You really have the chance to break the silos between the different departments. With the driver-based planning, you can execute proper rolling forecast because you don't have to type in every input value on a cost center, chart of account, product, customer level. You really can use the driver and execute on a monthly base rolling forecast. And then again, as you have seen with the Forex sensitivity, you can run scenario modelings quite easy with a driver-based planning model. And then also obviously when the whole models from an operational and financial point of view are integrated between each other. Okay, this is the last slide, but you have seen this slide already before. I hope you enjoyed the session. As I said earlier, it's halftime. The next webinars are coming, and we would be really happy if you sign up for the future webinars where we talk more about scenario modeling, top-down, bottom-up planning, forecast methodologies, and zero-based budgeting. And yeah, please join these webinars as well. We have now 3 or 5 minutes left for answering some questions. Therefore, let me quickly check the questions, and then I will be back in a second. Okay, questions are coming in. Let me quickly sort them. The first one, okay. Can a company combine different kind of planning methodologies? Like we have seen, driver-based planning, zero-based budgeting. Yes, obviously, yes. From our point of view, it's definitely doable. For example, zero-based budgeting is, from our point of view, is a quite interesting budget methodologies, but a lot of companies are not doing this on a yearly base. They may do it every 2 or every second year to really identify fat in the company and streamline the operational expenses in the company. But obviously you can combine then in this particular year also a zero-based budgeting methodology with driver-based planning methodology. Next one is my seasonality profile are product driven and not country. How can I change this? Okay, this was the first part of the demo, the gross profit part. There we have defined by country different kind of seasonalities, and this is a customization of the product. You can obviously also define seasonalities by product. If you are, for example, a company where you have dedicated products which will be sold in the winter season and or in the summer season, you can apply the same seasonality profile then to the product dimension so that you can plan and allocate the seasons to the dedicated product groups. Yes, that's doable. There's another one. How can I integrate different industry-specific drivers to my planning application? That's a good one. The most important part here is really this, the first part of defining the concept and the key drivers of your business. Before you build such a model, the company needs to sit internally together or with an external help to go through this process, to go through the most important KPIs, and again, select them carefully. Less is more in this area. And then they need to find a way, when they have defined the most important KPIs, to apply them to your driver model. And a lot of companies are doing this, but it's extremely important, what I have explained on the last page, that the software needs to be able to really need to be able that you can build this kind of driver logic. But you can add almost every driver from every different kind of industries to the full P&L, balance sheet, and or cash flow model of your organization. There is one more. How difficult is it to build an integrated model from scratch? Okay. It can take some time. No, seriously, our experience is, and that was one of the drivers why we have built a pre-built model, is that we have implemented a lot of financial planning models during the last years in a lot of industries. But our view was always that the financial core model, being the P&L, the balance sheet, and the cash flow statement, is in almost 70 to 80% of the cases similar, because the same concept applies there. You can apply the same different kind of drivers. Therefore, what we typically do is during a scoping workshop, we go in detail through the pre-built financial core application, and we identify then in a gap workshop what level of fit it is with a specific company. And then based on this, we have an assurance if this core model or the pre-built model really works. But as I said, in most of the cases, the financial core model, yes. But then obviously, if it comes to an operational model, a revenue model, or different kind of other operational models, depending on the industry, it can be quite different. But the important thing here is that you have the ability with the software to integrate specific custom-built operational models into the financial core model of the organization. Because only when you have this ability, you can then really do detailed scenario simulations and execute really driver-based planning concepts. Okay, let me. That was the last question. Okay. At the end, I can only say thank you very much for joining the webinar. As I said, check out the webpage, check out the next webinars. It would be great if you join them again. And you will definitely receive the slide deck and the summary email of today's webinar. And please get in contact with us if you have any questions around driver-based planning or other specific topics around unified performance management. Talk soon and have a great day. Bye-bye.